What's up, everybody? Welcome to the View from Jamestown podcast edition. This is episode 51, and this morning I am sitting down with David Fyfe, Chief Economist at Argus Media. Good morning, David.
Morning.
How are you today?
Yeah, very good, thanks. Very good. Sitting in a very damp and rainy London.
Yeah, we're looking at some sunshine here in Rhode Island today, but I guess we're getting another 4 days of snow tomorrow, so looking forward to that. But yeah, appreciate you taking some time. It's good to talk to you. Looking forward to the conversation and having you on the podcast. I figured just to jump right into it and really get into the episode. If you want to give a little background on yourself, your background, your current day to day, as well as maybe an overview on Argus Media as a company for anyone that might not be familiar.
Okay, I'll start with a little bit on my own background. I'm a geologist and energy economist by training. I've spent around 30 years, or just a bit over 30 years, looking at energy and commodity markets, looking at physical fundamentals and pricing and forecasting. Before joining Argus Media, I had a period, I had about 10 years in Paris with the International Energy Agency as head of their oil industry and markets division. Then in 2012, I moved to Geneva, Switzerland, where I worked as chief economist for the Gunvor Commodity Trading Group. And since early 2019, I've been chief economist with Argus Media. Now, Argus Media is one of the premier global price reporting agencies, or PRAs, and we're tasked with essentially providing pricing indexes and benchmarks across the commodity complex. Argus Media began life in 1970, so we celebrated our 50th anniversary as a company last year. But we cover not only the oil industry, but gas, coal, power, petrochemicals, a very important part of our business, but also the metals, fertilizers, and agricultural markets. And we essentially survey physical prices within the markets. So either transactions or bids and offers to try and provide the commodity industry with reliable, independent price benchmarks.
Yeah, it's obviously something that I've become more and more familiar with my time with TCC. Obviously an important part of our business. And what is I guess with Argus now, what does your day to day look like? What do you spend a lot of time? Is it a lot of research, talking to companies, general macroeconomic things? What do you spend a lot of your time with?
Yeah, I mean it's a nice varied role that I have with Argus, very enjoyable. Some of it is internal, so in a sense, I hate the phrase, but my boss sort of used the phrase when he was describing my job, sort of thought leadership role, trying to provide consistent views on the macroeconomy, cross commodity strategic issues that affect the commodity industry writ large, and also touching on areas of geopolitics and government policy and how that may affect commodity markets. So that's the sort of internal strand of the job, but there's also quite a lot of time spent out speaking to the market, speaking to our peers in the commodity space, and speaking to governments and educational institutions about the analytics that Argus generates, and also explaining what the PRAs do, because it's something that some people don't really understand very well. So there's an explanatory role to the outside world, as well as providing, thought leadership and market intelligence internally as well.
Yeah, and I think that's a good transition into our first sort of real topic in terms of what's going on around the industry. It's kind of more of a general macroeconomic update. I think it can be divided up into two sort of sections. There's kind of the piece of wrapping up 2020, what happened, how we ended 2020, and then now that we're obviously well into Q1 in 2021, what that outlook is both for the first half of the year, for the rest of the year, and even looking beyond there. But I think just to start out, I mean, what is your sort of high level wrap up on 2020 between COVID, between different things that were going on last year? You know, I know, I guess from a economist standpoint, a very up and down year and a pretty rapid time frame. But yeah, what's kind of your wrap up for the year we saw in 2020?
Yeah. Well, of course, we're still living with the lingering effects of COVID-19. So, that's still with us in the first quarter of 2021. But if we look back on 2020, I mean, obviously a much overused phrase in throughout 2020 was unprecedented, but it really was an unprecedented hit on economic activity, concentrated in the second quarter of the year. In overall terms, actually, when you stand back and look at it, what is amazing is that the contraction of global GDP last year was only something of the order of 4%. I mean, it was the steepest hit the global economy has taken, in over a century. So it is massive. But sometimes when you look at the bare numbers, it seems not all that impactful. And obviously, it hit across the commodity complex. It hit energy markets particularly hard, that contraction in GDP. Commodities demand is obviously driven by income, and therefore commodities took a big hit. Energy took the biggest hit of all, obviously because 60%, 60% of oil demand, for example, takes place in the transportation sector. So obviously, if you've got lockdowns and you've got prohibition on travel, oil took a very, very big hit. Obviously, we saw prices actually falling negative last April, which really hasn't happened before. Thankfully, we've recovered since that period, and the whole commodity complex has progressively and gradually recovered since the low point in the second quarter. Obviously, industry has rebounded fairly rapidly. So industrial production has come back quite strongly. The services sector really is still in the process of recovering, not least, hospitality and transportation and those sectors, which are going to take many, many more months to recover. We've had differentiated impacts between the developed world, which has managed to spend something like 25% of GDP in terms of fiscal stimulus. So governments in the developed economies have had the firepower to lend support to individuals and businesses. Unfortunately, in the emerging economies and the poorer economies, they've only been able to spend something between 1% and 6% of GDP on fiscal stimulus. So I think there are concerns as we go into 2021 about how quickly the commodity intensive developing economies will be able to recover. China has really stood alone. I mean, China has been quite remarkable that by the middle of last year, Chinese GDP had actually recovered to fourth quarter 2019 levels. So the Chinese have really managed the economic impact of COVID-19 much more successfully than the rest of the world. In fact, China and Chinese imports were really what put a floor under commodity prices across the board in 2020. The year could have been much, much worse for the commodity space had it not been for the robust rebound that we saw in the Chinese economy, particularly in the second half of last year. Some of those trends are going to trickle through into 2021. But that's where we stand. The economy contracted last year by about 4%, and we expect probably this year we'll see a rebound, all things being equal, of something like 5% growth in GDP in 2021.
Yeah, that's a great, I think, recap on what we saw last year. And I think maybe a good segue right into what our forecast is and what you see for 2021. Starting to talk about, obviously a potential 5% increase in GDP for the year. But in terms of a macroeconomic point of view, what is your outlook for this year? Obviously, we're here mid-February, so a little bit into the year. I don't know, at least from our side, we've seen pretty strong demand and some supply tightness across the industries that we're involved with. So it seems like demand has picked up across the sectors we see, which I think bodes well for what's to come the rest of the year in terms of the economy. But what's your outlook on what's to come this year?
Yeah, I mean, we're going with a sort of consensus view on the macro picture that we have a sort of asymmetric V-shape recovery. I said earlier on that we think Chinese GDP already by the middle of last year had regained in absolute levels where it was at the end of 2019. I think the story is rather different on a regional basis. And we actually see much of the rest of the world actually taking until maybe the fourth quarter of this year before GDP outside of China recovers pre-pandemic levels. So we certainly see a rebound. We certainly see ongoing fiscal stimulus. The US is going to be crucial in that regard, and how much of Biden's $1.9 trillion stimulus that actually gets pushed into the economy, that will determine, the pace of the rebound in the US. But there are similar ongoing stimulus packages at work in Europe and in OECD Asia. As I said, the commodity intensive developing economies have had rather less firepower to deploy, but nonetheless, we're seeing, quite strong rebound as lockdowns start to ease in the developing world. And crucial to this whole thing is going to be the effectiveness of the rollout of vaccines. Essentially, we would assume that much of the advanced economies manage to get the bulk of their susceptible populations vaccinated sometime around the summer. But it could even take possibly another 9 to 12 months before some of the emerging economies manage to get widespread deployment of vaccine. And that, of course, is going to determine commodity demand going forward. But it's fair to say, transportation is still struggling. The petchem sector has rebounded relatively well. Petchem demand has held up relatively well. So it's, steady recovery this year. Commodity demand, we think, driven again by China, stands to recover quite strongly, we think, in 2021.
Yeah, and you mentioned one piece in there with obviously the new U.S. administration with Biden taking office over the last couple of weeks. How big of a role do you see that playing? Obviously, there's the U.S. piece of it too, but how big of a role do you see that playing in global economies, and how big of an impact do you see the new administration taking versus the administration that is now obviously just leaving office?
I mean, I think the commodity markets sent a signal as early as last November, around the time of the US election. The combination of that and successful trials on vaccines, and really there's been a surge in commodity prices since last November. Crude oil is up very strongly. The olefin markets have rebounded really since last November. So it's been a fairly broad-based bounce, and I think there's quite a lot of optimism there that we're probably likely to see a rather more proactive fiscal support program in the US with the incoming Biden administration, and potentially a rather more sort of coordinated approach to managing the pandemic, potentially, although obviously individual states in the US hold the key to the rollout of vaccine and pandemic control. But so we've got the underlying levels of financial support. We've also got quite an ambitious set of energy and environmental policies that the Biden administration are looking to bring in. I mean, potentially there is a further $2 trillion that is earmarked for decarbonization within the US. That's obviously going to play a major role in shaping energy policy going forward. The one thing I would say is that some of the more ambitious spending plans in the US and decarbonization plans, of course, are going to come up to how easy it is to get those measures through Congress. And the Biden administration has a fairly narrow majority across the two houses of Congress. And so there may need to be a little bit of compromise in terms of spending, in terms of the sort of tax proposals that the Biden administration, were it given a free hand, might like to bring in terms of taxation on oil and gas, etc. So, it's one thing to have a pre-election manifesto that says we're going to spend this amount of money and we're going to decarbonize at this pace. I suspect some of the measures may be slightly trimmed or slightly slower to come into effect just because of the political reality of having to get some of those measures through a fairly finely divided Congress.
Yeah, and one point that you had made in there talking about energy markets and oil specifically, obviously I know both crude and Brent oil is something that at even a high level affects us as a business, all of our customers as a business, especially for TCC and our industry and our customers. So what is the outlook on the energy markets, for the year? I know crude has been off to a good start. Is that something that we continue to see moving upwards? How feasible or durable is that to continue? What is your outlook on the energy markets?
Yeah, I mean, if we take the crude oil market, which tends to be the focus of what I look at, we came into 2021 with a view that it was going to be quite a long haul in terms of draining the surplus inventory that was built up in the first half of 2020. I mean, we think maybe around half of that surplus inventory has already been drained. But it may well take another 9 months or so for the rest of that inventory to be drawn down. And of course, in the oil market, even although we expect a fairly robust recovery in oil demand this year, after the contraction we saw last year, OPEC Plus is a very important part of the equation. So Saudi Arabia, Russia, and colleagues who are voluntarily restraining supply to the market are having to manage the market, and they've been very successful in managing supply to the market, really since April last year. But they've got a lot of hard work still to do through 2021. Particularly given the uncertainties over the recovery in oil demand that we expect. So our view, our last monthly price outlook for crude had WTI for this year as a whole averaging about $55 a barrel, Brent averaging something around $58, $59 per barrel. So you can see that in February, with WTI trading sort of north of $60 a barrel, we'd argue potentially the market is a little bit overbought at the moment. We think there's a lot of speculative net length in the crude market at the present point in time. We don't necessarily think prices have any reason to collapse from here unless there's a resurgence of the COVID-19 pandemic. So we're certainly not suggesting that prices have to collapse. But we would expect, with the sort of bumpy ride that the market is likely to face between now and the middle of the year, when sizable portions of the population are vaccinated, we think there could be a sort of fairly volatile period, a fairly choppy period in crude prices between now and the middle of the year. And we wouldn't necessarily expect prices to continue rising at the pace they have been doing over the last couple of months. Very hazardous, of course, to make any forecast about crude oil prices. OPEC ministers will meet in early March and decide what they're going to do from April onwards. But there could be a little bit extra OPEC oil leaked back onto the market from April onwards. And then we have an issue that also the Biden administration confronts, which is what to do with Iran, because there's probably about 2 million barrels per day of Iranian oil that has been shut out of the market because of sanctions. The Biden administration wants to renew the nuclear deal with Iran at some stage this year. And when that happens, obviously some of those Iranian barrels come onto the market. So we're constructive oil and energy demand recovery for this year. But in the oil space, there's quite a lot of oil that could come back onto the market, and really can OPEC Plus control that? And then, of course, there's the big question about the US shale patch, which has been hit very, very hard. Investment in upstream oil, particularly in US shale, was slashed last year. Does $55, $60 per barrel allow some of that US shale supply to come back onto the market? Obviously, as we speak today, Texas is suffering from an exceptional freeze and weather event, and that shut in a lot of extra Texas oil supply, but hopefully that will be a relatively short-lived phenomenon. And really the big question hanging over the crude market is how quickly does US shale supply for oil and gas come back amid slightly higher prices that we expect for this year. So a huge number of questions in the energy space for 2021, but we would be broadly constructive the energy complex this year, even if we think crude is probably a little bit overbought as we speak in mid-February.
And maybe one more question to throw your way too is one of these buzzwords that's obviously been a something that's been happening more and more over the few coming years, and I think something that'll be a long-term play is the renewable energies and sustainable energies and things like that. I'm not sure how closely you follow things like that, but I would assume more of a long-term play, whether it's 10 years, 20 years, 30 years, different economies or companies committing to being, renewable energies and things like that. I know Europe has some regulations going into effect, I believe, this year, recommending or mandating a certain percentage of, I think, vessels being based on renewable energies. Do you see that further affecting the crude oil industry, maybe further just beyond 2021, maybe more of a 5-year, a 10-year sort of outlook?
Yeah, I mean, I think it's a little premature to call peak oil demand. Our base case has a recovery post-pandemic, and then oil demand globally continuing to grow through to around 2030. Obviously, in Europe and other parts of the developed world, there is a huge environmental agenda. We're going to see electrification of vehicle fleets. We're going to see a more broader, I think, theme of electrification across the economy. We're going to see greater use of hydrogen, biofuels. So yeah, ultimately oil demand will peak, but there is a massive appetite still for petroleum and petroleum-based fuels in the developing world. So I don't think we're going to see a peak there, anytime in the next decade. So the emerging economies are going to still be looking for a lot of oil. And one thing I would say that we have to bear in mind is whatever the trajectory for oil demand going forward, you need to spend consistently, 350, $400 billion a year to prevent oil supply declining. Mature oil wells decline production very, very rapidly. So really what the industry has to grapple with is ensuring a supply of capital against this narrative of an energy transition. I mean, essentially, we're going to need all possible sources of energy to meet, a demand for energy, for clean energy, for affordable energy for decades to come. And so it's important that the industry doesn't take its eye off the ball and assume it's all renewables. We need more renewables. We need wind power. We need solar power. We need hydrogen. But we also need investment in hydrocarbons to ensure that, the baseload supply is there to meet demand over the next 10 or 20 years. So I prefer to see it as a sort of diversification of the energy system, diversified fuel forms rather than necessarily decarbonization straight away in the short term. So there's plenty of work to be done to ensure that supplies of all forms of energy are available to meet a growing global economy, a growing global population.
Yeah, I think it's a very interesting outlook, more so diversification, like you said, and having a variety of streams of energies versus a complete 180. I think a lot of the viewpoints is, we're here, we need to go here versus maybe having a little bit in the, in between,
It is a
not a complete
transition.
180.
It's a transition. You can't flick a switch overnight and just get rid of oil and gas and coal. We will see their share of the global energy market diminishing. We need renewables. We need arguably carbon pricing to enable technologies like carbon capture and storage, for example. We need more recycling. And I know in the petchem sector, recycling of plastics is a big topic. So we need all of these tools. And I suspect at some stage, carbon pricing is going to have to play a much bigger role on a global basis to enable what we all want, which is a cleaner air and stabilization of global temperatures.
Certainly. David, I think that was a great episode. I really appreciate your insight and taking the time to be on, our podcast this morning. Before signing off, I'd like to maybe just give you the opportunity how people can get in touch with you or Argus Media, what the best way to, follow up with you or inquire about any of the services that Argus offers. How should people get in touch?
Well, I want to thank the chemical company for inviting me to speak with you. It's been a real pleasure to talk to you, and check us out on www.argusmedia.com. Contact me by all means, david.fyfe@argusmedia.com, and I'd be happy to answer any questions about our company and our services. So thanks for giving me the chance to speak with you today.
Absolutely. Thank you again for the time. We'll make sure we put your email and we'll put the website down in the show notes wherever you're streaming this podcast. Again, thank you for the time. Great speaking to you. And maybe we'll have you on here sometime soon over the next coming 6 months, year, whatever that is, and see where we're at that point.
I'd love to. Thanks a lot, Ben. Thanks a lot. Bye for now.
Thank you so much, David.